how worried should we be about the retail real estate investment trust in a world where so many chain stores are really struggling? Look at Federal Realty, perhaps the best-run shopping center REIT in America. Here's a stock that's down 12% year-to-date, in part because of the tough retail environment, and in part because investors tend to start shying away from REITs when the Fed is raising rates. Federal Realty's 3.1% yield gets less attractive every time the Fed tightens. Still, Federal Realty remains bullish on the prospects when the company reported in May. This is a very well-managed business. So can they triumph over the retail malaise, including the havoc that Amazon's causing all over the place? Let's take a close look with Don Wood, the president and CEO of Federal Realty. Find out, get a better sense of how his company's doing, where it's headed. Mr. Wood, welcome back to Mad Money.
Great, Jim. Thank you.
All right. Now, I think you're probably going to say, figure I'm going to ask you, okay, isn't Amazon decimating on your clients? No.
We're not going to talk about Amazon today.
We're going to talk about Amazon.
Go ahead.
Is there a way for any real estate investment trust to distinguish itself from any other when the group is so tightly correlated that it seems like the best trade with the worst?
You know, you're making a point that is the single biggest thing that impacts me day in and day out. What I know is that you and I have talked for years about challenges in retail. Therefore, how does that translate to challenges in real estate? Those are very different things. And effectively, what do you do to differentiate yourself? I'm not so sure the world knows what I'm about to tell you. And you just got to bear with me for a second, right? If you sit and you think about it, with every bit of retail news that happens out there, no matter what it is, it slams the REITs as much or more, in some cases, as the retailers. Do you know that in our income stream, 8% of the income stream is grocer? 9% of the income stream is full-priced apparel, effectively. 6% is discount. 6% is residential rents. 7% is office rents. Basically, it's the most diversified income stream in places that you wouldn't possibly say, oh my gosh, the real estate is bad and it's not as valuable.
Okay, so how come the bond market, which allows you to borrow at incredibly low rates, is smart enough to understand what's going on? That's why I felt about the idea that you can't distinguish yourself, because the stock market's not as smart as the bond market. Take its cue from the bond market. If they did, your stock would be dramatically higher.
Well, it would, and you're right. Is somebody right and somebody wrong? The bond market versus the equity market, the public equity market.
Right.
And let's make that distinction, because in the private market, I can tell you, based on things that we're looking at to buy, you would think that they're a whole lot cheaper. No, they're not at all, particularly the high-quality stuff.
Well, look, I mean, your stats that you have, okay, the most cogent one. Now, everyone freaked out when you had those anchor vacancies, okay?
Right.
So what do? You rent new tenants, and the rent exceeds former tenants by 36%. So in other words, you dramatically upgrade. All people hear about is a vacancy. You're thinking, this is my opportunity. Why do people not understand that?
You know, there's always a lag. And as I talk to my compatriots in this business and everything else, we all know that certainly at Federal, our income stream is very much expected to continue to grow.
Right.
And it has grown for a long time,
and
et
your
cetera.
dividend record is by far the best in the industry.
It's crazy. You need to show it and continue to show it, because what I'm hearing people say is, yeah, this is different than ever before. So that past record doesn't matter. I don't buy that in our locations.
Well, the reason why you don't buy that is because you taught me it. You told me that this was going to happen, that everything that's happened, you told me was going to happen, so you had to prepare for the apocalypse. Most people are waking up now. I look at your tenant list, and I know that you've been thinking for many years that this was all going to happen. So my question to you is, how did you know to avoid certain credits? How did you know to avoid certain tenants?
Look, when you have great quality real estate, you have more choices. Right. It's that simple. And when you sit and you think about the notion that we have been an urban company for 30 years, we've been around for 50 years, and the places that we were in became more urbanized as the country is becoming more urbanized. So you could see it coming, and if you had real estate that allowed you to have choices, you were able to act on it. Don't forget the balance sheet, man, because if the balance sheet's not the biggest part of this, I don't know what is. Combine that with that real estate, things look pretty darn good from my point of view.
But let's play devil's advocate.
Yeah, man.
I'm on all these conference calls, and the really good really good companies that are in retail are saying, when our leases are up, we're going to negotiate those rents down. Can they do that with you?
In some cases, they'll be able to. In other places, they won't be able to. It depends on the leverage in that particular spot. That's why I don't like to talk about a particular, any particular thing. When you look at the anchor leasing that we did overall, 36% higher rents. And that's not, 2 years ago. That's the last few months.
Now, are there any situations where you ever lowered rents before in your history?
Of course. Of course. So when we sat and you look at 2008, 2009, 2010, there were there were a lot of similarities with respect to supply, because I believe we've been oversupplied as a country for a long time.
Said that for ages.
This isn't new from my perspective. But when you took a look, and we did lower some rents for some people, we did work rent relief, yet overall, we were the only shopping center REIT where 09's income was higher than 08's, 10 than 9, 11 than 10, and so forth. How can that happen overall? Does that mean there aren't specifics in any case that you can point to? Sure. Look at the company over the long term and look at the quality of that real estate.
And that's why we stick by Federal Realty.
I appreciate you doing that.
Candidly, I'm not sticking by a lot of the others. All right?
Jim, thank you so much for the time.
Okay, that's Don Wood, President and CEO of Federal Realty Trust. When I tell you this man off camera told me this was all going to happen, does that help you? It helps me think about it. Mad Money's back into the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.